Hello everybody, I'm Giuseppe Basili, also known as the FibStalker. Welcome to this weekend video review. This is part one of this Sunday review. Today is March the 18th, 2018, and this video is part of the FibStalker Analysis and Trading Service. This service is part of FibStalker Trading and the FibStalker Winning with Algas community. Now, as usual, I want you to, if you are watching the recording, pause and read and accept the disclaimer here. This is the usual disclaimer. Past performance is not indicative of future results. Trading forex carries a high level of risk and may not be suitable for all investors. As usual, the commentary and trade ideas that are provided in this webinar should not be relied upon as a substitute for extensive independent research, which should be performed before making your investment decisions. All right, so once that we've got this out of the way, let's start and review our market. As usual, I'll start from the S&P 500, and this market has been correcting in the last few days. As you will remember, the price basically printed a higher high here and then started coming back. Now, very little has changed here from last week. We might have extension short in play here, as we can see here on the daily, the 127.64. I'm not sure if you can see that. I'm going to make this a little bit bigger for you. In the daily, 27.64, pushing lower, and that's an extension, a notable extension, lows to lows around the 27.64. The actual level is the low of this bar. Okay, so if we want to trace it, because the FibStalker method is a precise method, so it's very important that we trace from the actual lows or highs to lows. And 27.64, first target is 27.36, second target 27.21. All right, so that's what we're seeing at the moment. And let's not forget that on the daily we had this 50%. This is a range. The 50% might hold. Let's see where it's placed. Also, based on the move we're having on the 4-hour time frame, is on the 27.30 level. So we'll see whether we get a bounce around that level or not. If this is a range, the market might only temporarily bounce from 27.30 and then continue lower into the 27.59. Dollar index this week is a very important week. There is a wide and spread expectation that the Fed is going to increase the interest rate of another 0.25%, 25 basis points, and actually the behavior of the dollar in the last few days and weeks seems to be discounting that increase. Of course, if the increase is going to come, I think we're going to see an acceleration in the dollar index, which is going to mean a move lower in the euro as well. Okay, in the euro dollar forex pair. So the market may move today and then tomorrow, Tuesday, and probably it will slow down tomorrow at the closure of the US session, and then will be slow until there is the FOMC. So as usual, be careful. Any position probably should be exited at the end of tomorrow US session. Gold and silver, of course, with the dollar index accelerating higher, these markets are weakening here. We're seeing, as we see here on gold, we've seen Thursday, Friday, and now the open actually opening weaker here. Of course, if there is an increase in the interest rate in US, it's very likely to see this market breaking the 120, the 1289 here, and going to trade into the 1263 level. Okay, that's what we are likely going to see here at the beginning of the week. Silver, same story. We know that silver has been weaker compared to gold. On the monthly, we have this 19 level, which has targets that have not been touched yet. The weekly has been more less technical here, and on the daily, we have the 70 level that has traded back in February here, mid of February, and that has 1583. So nothing has changed in silver and gold since the last few weeks, and imagine why, because this market have been basically going nowhere along with the dollar index and many other markets. So these are probably the most difficult conditions to trade. Of course, on intraday it's still possible to make money, but obviously, when we look at the daily moves, beautiful extended daily moves like this, we need the market to get out of this sideways action, and this week might be the week that happens, and we could see a strong move into first target. All right, so let's start from the majors here, starting from the Australian dollar. US dollar, this market has been weak here. It has never tested that 81.65 that I wanted to see tested on the monthly time frame, but nevertheless, this market has retested previous highs, and it's in a sideways, large sideways on the weekly. And now, as I mentioned many times in the past few weeks, we have these two levels that we're probably going to revisit: 0.7586 and even the full 50% that was never tested in the previous cycle here. The market never went into that 74.80, so we could see that being tested as this market continues lower. Okay, so when it comes to the traditional measure move that are in play, we have that 50% from highs to lows, and I'm going to remove, for now I'm going to remove on this daily chart here, I'm going to remove any other choices. The 79.46, 79.50 has been in play here, and the first target is very close. That's the 75.90 level here, and let's double check that. 70 level, and that's what we be likely going to test this week. Before or after, we might have an extension trading here, and we're going to look at two levels. One would be this extension here, no double anchor, and the other one, if we get another extended bar, is going to be the other notable anchor here, is the first bar, long bar to new bar. Okay, so we're going to see if this market is going to offer us an opportunity for a continuation. That would be a great trade into basically previous lows. Okay, so that's something to keep in mind in this market. Now that and if the dollar index starts accelerating on the upside, we should see finally markets start moving again. Euro dollar, this market has failed the aggressive measure move, and this puts this market potentially into the 1780 area. How did we get to that level? Well, we just apply rules here, and once we have identified even after the fact, it doesn't matter, the previous measure move, the next measure move is going to be 1780. That's 1790 area. Okay, so that's how we come with these levels. And this market in this reversal has not been very technical. We had lateral move, 50% that never held, and in fact you remember that even in the last few tests here, 124.03 was pierced twice, but nevertheless this market is likely to continue lower as a busted setup into the 120.56. all right, so before or after, this market might offer opportunities to trade continuations if it is true that this market has to test the 1770. Okay, the 1790 let me just double check on the other time frame. That was the 1790. Okay, so I want to leave this level on the charts just for our reference. Okay, doesn't mean that the market will get there. It only means that if the market gets there, then we'll need to test that area for participation from long weekly algorithms. Okay, so let's play. Let's have these markets play now um, with the FOMC. That is likely going to be an event that, whether there is an increase in the interest rate or not, is going to create some volatility here. So we need to be very careful this week. But after that announcement, we will see and identify the measure moves that will likely going to offer us opportunities going forward. So the pound versus US dollar here also has been not as technical as we would like it to be, and it also on February here pierced the 50% short, which however was respected. The 140.50 area here was respected after that. So the 132.30 level here is legit, and the next measure move here, when we consider this high, also has failed here. So this market is not very technical. What we are going to test now is the opposing measure move here, and with projected strength in the dollar index, we should see this 138.19 fail, and market move actually move below the level and potentially into that first target. The first target again being the highs of the previous highs here at 136.30 level. US dollar, Canadian dollar. The Canadian dollar has been on ripe higher here, and with a reason, because the 50% long, as we mentioned last week, has traded, so very little has changed here. We have two levels now above current prices on the larger time frame that we need to watch: the 133.67 and the 135.70. These are the two levels that we have to watch, and as the US dollar likely moves higher this week. However, we really don't know what's going to happen. Okay, so we always have to start from that mindset and mind frame. I mean, we don't know what is going to happen. What is very possible though is that the 61% level here, 131.34, is actually pierced on the upside, and the first target of the extension long that held 2 weeks ago was respected here and brought price into the first target. The second target, 131.95, it's actually very close once the 131.34 is based on the upside. So if we get that strength in the dollar index this week, I believe that's gonna, we could reach the 131, 132 level very quickly, potentially even on Wednesday after the announcement, if the announcement, of course, confirms what everybody is expecting here. Of course, as usual, as it happens sometimes, we could also have a sell the news kind of behavior, considering that the dollar index has been kind of moving high in the last few days. In any case, laterally discounting potentially already this event. So we don't know that really, so we'll need to wait and see what's going to happen. US dollar Swiss franc also has been very strong, moving higher. This market had also a great reason for doing that, and that was the 50% here that we trace from lows to highs This 50% is not held at the very beginning, then it started holding, and it actually continued holding here in the last test that happened in January 2018. So actually in February and January and February. So what we are projecting in this market is just higher prices here. And this market has been pretty technical. We had lows to highs, participation at the 93.40 area, and then the inner measure move here also showed a 50%. Okay, so the larger measure move is still in play and as a target in the 96.50 to 70 area. The inner measure move is in play and could bring price into that first target and potentially help price into that second target. So let's study a little bit the targets here of the inner and outer measure moves, and so the outer measure move is the first target at 95.61. So the first target of the inner measure move will help price into that level. Okay, the second target of the larger measure move is 96.76. However, when we look at the weekly here, we can see that there is a potential level of resistance at 96.11. So before we get into that second target. Okay, so keep that in mind, and that would be a good profit-taking area for any swings in this market. US dollar, Japanese yen. So US dollar, Japanese yen as confirmed weakness here of the US dollar, Japanese yen, which actually reflects strength in the Japanese yen. So this market has continued moving lower despite a dollar index correcting laterally and potentially preparing for a move higher. Okay, so this market is still pointing to a retest of 170, as we have mentioned a number of times here. And even today, as we can see here, this market has opened and it's actually moving downwards here. Okay, so this market has not been technical as we would like it to be, and as it usually is. And again, for me, the motivation is the fact that there is a widespread strength in the Japanese yen that could actually reflect the winning of the carry trade, and that would mean bad news for the US stock market as well. But this is all speculation, because then we need to see what price will do. What we know is that price of US dollar Japanese yen is continuing lower into that retest of 170. New Zealand dollar, US dollar also has been very weak here, and that weakness continues this week. Now, as you can see here, the beauty of this market is that it has very well defined levels. It has traded the shorts here at the 75.20 back in July last year. It has traded longs at 68.50, and most recently also at the end of 2018, and was not able to retest those levels. It's going back to 68.50. So to me, the way I see it is just a matter of how we capture a traditional extension measure move here. Okay, this market is also going to retest for the third time, and this time it might be the time when this level breaks, especially if the dollar index continues higher. It has been printing lower highs here, and it's testing the 71.87 once again. As we mentioned for the Australian dollar, US dollar here on the daily, there are two anchors that I'm going to look at, and although I anticipate that 71.87 is going to eventually be broken However, what I think or anticipate is not very important. We need to see what the market is going to do. But if that's the case, that might happen right away or after a bounce, and that bounce we could use the anchor here, the notable anchor, or another notable anchor, which is the lows, the first long bar to whatever lows are printed. Okay, so those are the two levels that we have to watch for to time a continuation lower in this market. Okay, and finally for this first part, I want to review the US dollar, Singapore dollar. I use this as a proxy for the dollar. I mean, this market has been pretty weak at the beginning of last week, but then it recovered and nicely, and Thursday and Friday, and today on Sunday, Monday session is actually opening high. It's testing the 50% from a previous high here, and that's the reason for the this potential weakness here or slowing down. But this market actually could continue higher. Note how the trend line really don't tell anything about where the market should stop. In this specific case, this could be this would be considered a false breakdown here. But the reality is that on one side, smart money knows that a lot of people are looking at that trend line. On the other hand, though, there is no there is no there is no indication that this market should behave one way or the other. Lots of people will say this is a false breakout, but there's not really a lot of meaning attached to this. This is just sideways here, and if the dollar index is going to be pushed higher thanks to an increase in the interest rates, then we're going to see the US dollar, Singapore dollar as well follow. Okay, so obviously we have little edge in this lateral move here, but as soon as this market will start trending again, we're going to jump on the bandwagon, so to speak. Of course, only after testing valid FibStalker setups. Okay, so this is it for this first part, and I'm going to work on the second part, and I'll see you in the room. Bye bye now.